Morning everyone, this is Rajendran here from Market Calls, and in this video log we are going to discuss about uh, the market profile setup and key reference levels for 4th December 2016. So right now I'm in Nifty future February contract. So let me split the previous day's profile. That is on 3rd Feb. So I'm just right clicking and splitting the profiles. So it's one of the toughest day to trade. So what happened on the previous days, so we got an balance at the top in the 7600 zone, right, followed by an market came by a sharp down move with a late spike on 2nd Feb, obviously due to the post the RBI announcement. And then the very next day we got an sentimental gap down. So market opened the gap down because of the global sentiments. The Dow Jones, the S&P 500 and the complete Asian pack was weak in the morning, so we got a sentimental gap down of more than 60 points, right? And then market was completely moving in a range bound fashion, right? So it opened with a gap down, so it opened below the previous mechanical reference level 7420 zone, and then it tried to remove those zone by doing some activity in those zones, right? So really trading was really tougher one with this kind of movements. Market was completely lackluster. It initially tried to break down, it tried to make an IB breakdown at the C period, followed by an IB breakout at an I period, and again market does another IB breakdown at L period. So market was testing the IB zones thrice on 3rd Feb. So it's really an tough moment to play the game from an intraday trader's perspective. However, you can notice that the period E, F, G, H, I got an one time framing, and then one time framing got stopped, followed by a late sell off, right? So again, let me go through the key reference level. So if I unsplit this profile, we got a balance, so we can see a very prominent pop zone at 7404 zone, right? And then we also having a back-to-back poor high and poor lows. And let me scroll through the upper side. On the upper side, if I split this profile, I can see some JL weak high coming in. So it's a weak, it's again a weaker reference level, right? And then if I split this profile, I can see an anomaly in the zone, and the spike, there is a late spike coming at this point. So again it is an we have a single prints with a spike bottom at 7502. Let me scroll through the downside reference level. On the downside, if I scroll back to 22nd, we seen a short covering rally. So we have a minus development zone over this period. So right now market is traversing within the minus development zone, right? And we also having a poor lows on at the very bottom, 20 and 21st we have an back-to-back poor lows coming in. So we have the poor lows are at 7247 and 7265, right? So what are the key reference levels says, if the market is going to sustain below 7384 zone, it's going to be really going to be more bearishness, and more likely there is also a possibility, since we have having a back-to-back poor lows and poor highs, there is a possibility of a market testing both the sides, right? So either way market could do anything if. And also we have an prominent POC coming in at 7404, which is more likely to be visited. And the poor highs and poor lows tells me that there is a chance that the market could test both the sides. Alright, so both the sides in the shorter run, it could be an very possible nature. So only one thing is very clear: if the market is sustaining below 7404 and then it's trying to create an value area on the downside, it could again try to auction towards this previous poor low zones which we skipped, right? So right now we don't have any sort of strong rally coming in the market to tell that this is the absolute bottom. So because there is no excess left in the market, so more likely these reference levels are weaker reference levels. The new low has to be made in the market, right? So as long as the excess is going to get created, it's really it's really tough to say that this could be a potential bottom. This cannot be potential bottom because of the lack of excess, right? So let's see. I mean, any auction below 7404 is more likely to be weaker. There is also a possibility of market testing both the sides and try to clear this gap. So we have a gap at 7447 zone, right? So there could be a possibility to market test both the sides, and then it could form something like an engulfing sort of pattern, right? That could be another absolute possibility coming in. So again, we are going to play in a very rough environment in the market. So from the intraday traders perspective, it's going to be really challenging for the intraday players, because this market is moving with a very moderate volatility, and more likely the moves in the market are really faster, right? So and it's very steeper as well, and before your indicators turns, the market turns faster, right? So let's see. I mean, any auction on the downside below 7404 or any sustainability below 7404 is more likely to test the lower side reference level 7265 and 7250. So thank you everyone.